Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, August the 7th. My name's Eric Wilkinson. Yeah, you might recognize me as the Wolfman on mainstream media, but I'm here to teach you guys some different option strategies you can implement in your portfolios, but please do that in your own way. And past performance of any trading system or methodology is not necessarily indicative of future results. All right, let's get it on with the economic data to start us off. We got it across the pond. We got German industrial production coming out at negative 1.5%, expected to be a positive 0.5%, and last month's number revised down slightly by 0.2%. One thing to note, we've been seeing some weakness over in Germany. This is a reflection of that. It's not one of the most widely looked at economic data points, so we're not going to hold a whole lot of credence in it, but it is consistent with the economic data we've been seeing across the pond that we're really starting to see some weakness. Yesterday might have been the first day where we started seeing some good economic data out of Europe, but right back into it with this economic data again. All right, here in the United States, we've got Evan speaking earlier this morning. He might be wrapping that up right now. We've been having all kinds of Fed governors speaking right now because it's in between meetings where they can actually talk pretty freely. So you're going to see a lot of those guys take that opportunity to spout off. And then finally, we got crude oil inventories, and we got a build of 2.4 million barrels, expected to be a drawdown of almost 3 million barrels. So a big build here. Remember the last couple readings, we had massive drawdowns. We had a 10 million barrel drawdown 2 weeks ago, and then another 8 million barrel drawdown last week, but it was expected to be a big build, or about a 2.5 million barrel build. So we had another miss by about 10 million barrels. Well, that's supply going down. And increasing demand, we should drive price higher. Well, we weren't really seeing that happening in the crude oil inventories or crude oil price. With the big draw, we would expect the market to move higher. A lot of the economies of scale globally and everything else, China looking to take crude oil from Iran, which really isn't part of this supply stream, and that could actually cause crude oil prices to start going down. So we could start seeing that even with some of the demand we've been seeing here in the United States and abroad. One thing to note, we are a oil producer, and we are one of the largest oil producers right now. As long as we stay up in the 50s, that's pretty good. Once we start getting below 50s, it makes those fracking operations a little bit more difficult to be profitable. So right around that 50 is the sweet spot. I've talked about it time and time again, right around $52 a barrel. All right, on to the bonds. Bonds moving higher again. We are in the 60 handle. We came up, I thought we were going to stay away from that. We came up and tested that 62 yesterday, making it look very much like top here in the bonds. We can see here, anytime you get that doji, I've talked about it before, especially at the top of a move, I mean, you don't get much better of a setup than typical like this. And then generally speaking, what we're expecting is some kind of doji like that, where that creates that topping pattern. The market kind of starts rolling over. Well, that's exactly what I was expecting right there, but we didn't get that at all. We've got this move here, which, we've got this one where we just blew it. As soon as you get over the top of that doji, that's where it is off to the upside and you get out of any type of setup, right? Well, bonds moving higher today, that means interest rates are going down, which is basically a good thing. We've got the teeter-totter where we look at it like that, where you have interest rates going down and price goes up. So we're seeing the price go up, which means the interest rates are going down, right? Which is what we're looking for. I don't have a position on in the bonds right now, but we can look over straight away over at gold, and it almost looks like I have the exact same chart up from gold, if I can find it actually. Let's pull up the gold chart. Where is my gold chart? Oh, it's over here. Sorry, guys. Gold looks very similar to the bonds, right? I mean, almost exactly, which is why I set up my strategy based on this, but remember I said as soon as we get over the top there, which is right where we open, pretty much correlating with about 1480 or so, that's where we opened up and immediately off to the upside, which I told you yesterday I did this trade based on a technical setup, which the technical setup would have been nice had it worked out, right? If I got this kind of doji where we got the market moving like that, and then I get something where, typically a red doji like that would have been great today. But we didn't get that. Today we've got the move to the upside, which breaks the pattern. We've got that right there, that move to the upside. Today's move higher breaks the pattern, and I'm out. So in that gold, as soon as we break that pattern, that's when I'm looking to get out of it. We'll talk about that trade here in a minute when I pull up the GLD. But let's get the rest of the markets out of the way. We've got the VIX slightly moving higher today, despite the fact that we're seeing a big move downward again in the Dow Jones Industrial Average, but we are seeing the market from the open rally back, and we're still seeing the VIX move higher, which is a little bit odd. I would expect to see VIX coming off a little bit as we are moving back. One of the things that we've talked about here also is the point of control going on. We are right here at the point of control, close to 25,700-ish. Maybe a little bit close, 25,700, maybe 25,800. That is a point of control, and that's where the most time and volume has been spent. That's where we are going to find comfort. As a matter of fact, I think I even heard like Jim Cramer talking about, his portfolio is kind of back to where it was back in June when we had those lows. Well, that's because that's where everybody got back in. That's where everybody exchanged hands. That's where we all traded and created that point of control. Well, now that we're back down there, there's going to be a lot of complacency because there is no fear that I'm losing money, and there is no greed because I'm not making money. So everybody is going to be very complacent as we get back to these points of control across the board in the equity market. So we can see over at the NASDAQ, again, similar situation, right there back to the point of control. It lines up with the 68 Fibonacci there. I don't think that that's going to act as much of a support and resistance, nor do I think that the 7,500 is going to be as much of a psychological type of situation where we get above that and all of a sudden we're scot-free, because we've got the point of control lining up right here at 74.50. So that is the magnet where we are going to be looking for the market to kind of pull down to that area, or if we're below it, the magnet's going to be pulling back up to it. So really the magnet is sideways and pulling right to that spot. So that's what we're looking for, the magnet pushing and pulling in both directions. But I think we're going to be very comfortable right there at 74.50 in the NASDAQ. Again, with the mini S&Ps, we are right back again off of the lows of the day. That's why I was a little bit surprised with the VIX not coming off as much as it is. More feels like a rally going on in the equities. As you can see, overnight inventory was very short, but as soon as we come into the day session, all we've done is rallied. So it feels like we are bullish right now, which again, back to the VIX coming off as well, I would expect a little bit more. So maybe a opportunity going on in and around these markets to sell premium. I talked about this yesterday. We were in an environment last week at around this time where the premium was very low and we were in a premium buying situation. Well, now we've just gotten out of that. We're into the premium selling strategies, and a lot of these strategies where we expected volatility to expand are working out great. So without further ado, we'll get on with that. With GLD, this one didn't work out very well, right? Because we set this up on a technical setup based on the futures over in gold. This is the ETF for gold. So I decided to get in there with this and went into the September. I had sold the 150 calls in there for about 59 cents or 58 cents, I think it was. Well, I was expecting the market to hold that area. We popped really high, as you saw there over in the gold futures. So I decided to pull the ripcord on this because it broke the technical pattern, and I got out for $1.07. So lost a little bit of money on that trade, but I am out based on the technical setup and happy to do so. JP Morgan, we just put this trade on Friday, last Friday, based on the webinar for the short butterfly, okay? So the short call butterfly in particular. This week we're going to be doing the short put butterfly. We're expecting a big move. I talked about this with JP Morgan in that webinar where we were looking at this market as if it needed to break out. We had been kind of trading in and around this area for way too long. We started breaking out. I said I was going to look to put this on Friday, and as you can see, this was the Friday I put it on. I was expecting a big breakout somewhere, not necessarily in JP Morgan, but the bank stocks, because of a lot of things that are going on in China, maybe a possible Lehman-esque type moment going on over there in China. We've got the tariffs and global economies kind of jockeying back and forth. That really doesn't bode well for any type of bank stock. So expecting this to pop out, and it did. So I had gone into this September, and I sold the 105 calls, bought the 115 calls twice, and then sold the 125 calls also. So that was my short butterfly that I originally sold for $4 and about 80 cents in there. My rule for that is what we're looking to get out for somewhere between 25% of max profit, 25 to 30% of max profit is what I'm looking for, especially when it happens this quickly. I mean, I was in this for less than about 4 days on that trade. So 25% of that $4.80, I've kind of figured out in my head that would probably be about $1.20 or something like that. And subtracting that out, that puts me at $3.60 for my exit that I would be looking for. Today we came in, I did see it go a little bit further. I was working to get out at $3 and about 20 cents. Never quite got to there. And when it started coming back again, like the rest of the broader market started rallying, I paid up and got out for $3.60. So very close to that 25% of max profit, which I'm looking for this type of strategy, low probability strategy. But when we expect it to blow up, everything worked out quite nicely. As you can see, we got into this strategy and got the volatility to increase, which we talked about that in the webinar, how we want to set these strategies up in the right environment to increase our probabilities of success. Well, all of those things came together on this particular strategy and worked out quite nicely. So we are out of JP Morgan, and then IBM is a trade that I'm looking at. I haven't gotten out of this trade yet, but it was one of those trades also that I look to, play for that move to the upside with the rest of the equities. In this one, I have on the 125 puts in there, but I haven't done anything as of right now. So the GLD trade, I'm out. JP Morgan, I'm out. And that's pretty much it across the board. IBM is something I'm looking at, but I haven't done anything as of right now. It held the 38 Fibonacci area right here, so I'm pretty happy with that. Remember, with this IBM trade, I am short the September 125 puts. Okay, so down at this level, 125 is slightly higher than there, but when we get the collection, it puts my break even below that Fibonacci area. So this chart setup looking pretty good. We are right at the point of control, so we should, again, following that mantra, start to settle down in and around these areas. All right, so a little long in the tooth today. Got a lot out of the way, but we had a lot to talk about. So check out tomorrow's webinar. It's going to be on the short put butterfly. I'm going to talk about all of the rules that I have for that strategy to increase your probabilities of success. Yes, you can go online and figure out how to design this strategy. I'm not going to lie, it is out there, but they are not going to teach you how to implement that strategy, which is what is going to make you either successful or not. All right, so check that out at Pro Trader Strategies. Also like us on Facebook so you can get these daily market commentaries much quicker. Take that.